So, hello everyone. I want to first of all say thank you to both of Michele, Boldrin, and Warren Mosler to their willingness to take part of this discussion. So today we will talk about modern money theory, and we hope we can basically discuss on some trivial points on this new theory or this theory, and we hope that this discussion can bring some clarity on this new theory. Okay, so the structure of the discussion will be divided in two rounds. In the first round, we have Warren Mosler for 10 minutes that will be basically debates on the basic on modern money theory. Then Michele Boldrin will reply for 10 minutes. After that, we go to the second round, in which we have 5 minutes each for Warren to answer to Michele, and then to Michele to answer back. And then we will go in this way for until the end of the discussion. So I think that we can start. And so Warren, you can start.
Okay, so I'm going to be talking about introduction to modern monetary theory. And this comes from what I called my white paper that I published for exactly this purpose. So I'll do a quick review here. Number one, understand modern monetary theory is largely, mostly, mainly a description of monetary operations. And monetary operations are the debits and credits to accounts that banks keep. And these debits and credits are for businesses and individuals, and banks would include commercial banks, central banks. So number one, MMT is a description of monetary operations. It was originated by me personally back in the early 1990s. And I've been the intellectual source for the theoretical framework behind it that I'm giving you now. So if you have any questions, you can come directly to me on this and you get it from the source. Others have been extremely instrumental in promoting it and developing the ideas and publishing them and getting them accepted. All of that never would have happened. I could never have done it on my own. This is all done by all the main MMT proponents you've heard about: Bill Mitchell, Stephen Kelton, Randy Ray, Pavlina, all the rest, and that I've worked with over the years. Okay, so what is different about MMT? So MMT alone, I believe, recognizes that the US government and its agents, of course, are the only supplier of the thing that it demands for payment of taxes. So I'm going to give this from the US point of view, but it applies to the Euro area as well. And so, so in other words, the currency itself is a simple public monopoly. Okay, and the government is the single supplier, the government and its agents, of the thing that can be used for payment of taxes and purchase of government bonds. All right, so, and this is the sequencing is critical. So what MMT indicates is that, number one, the government, you have a government that wants to provision itself. Okay, well, how does it do that? So the first thing it does is it levies taxes. These are tax liabilities. It doesn't collect tax. It levies tax liabilities payable in US dollars. Okay, the dollars to pay those taxes can only originate from the US government and its agents. And the dollars to purchase US Treasury securities can only originate from the government and its agents. And that means the economy has to sell goods and services to the US government or borrow from the US government, or it will not be able to pay its taxes or purchase Treasury securities. Okay, and these are all points of logic. And so the ramifications I list next. Number one, the US government and its agents from inception necessarily spend first or lend first, and only after that can taxes be paid or state securities purchased. So sequencing is critical. It's just like the movie theater. They don't collect the ticket first and then sell it. They have to sell the ticket first before they can collect it. Okay, this is in direct contrast to the common rhetoric that the United States must first get tax dollars to be able to spend, and when it doesn't tax, it must borrow from the likes of China, leave the debt to our grandchildren. So what we recognize, first and foremost, it's not the government that needs to get dollars to spend. Instead, the driving force is that taxpayers need the US government's dollar to be able to pay taxes and purchase US Treasury securities. Okay, this means that such things like crowding out private spending or private borrowing, driving up interest rates, federal funding requirements, and solvency issues are not applicable for government that spends first and then collects taxes, spends first and then borrows. So if you're spending first and then borrowing, your borrowing is not driving anything out. It's just not an applicable concept. Okay, we answer the question of how are you going to pay for it. After spending is authorized by Congress, the Treasury instructs the Fed to credit the appropriate accounts on the Fed's books. For modern monetary theory, the money story begins with a state that desires to provision itself. Other people begin money stories with barter and whatnot. We don't disagree, but our money story starts, the important money story, the money story that drives the dollar and the euro, derives from a state that desires to provision itself. As I said before, first it imposes tax requirements in the form of its financial obligations, which are tax credits. The dollar is a tax credit, the euro is a tax credit. Consequently, goods and services are offered for sale, okay, as the private sector works to get the funds required to pay the taxes. So MMT requires that taxation by design is the cause of unemployment, which we define as people seeking paid work. Okay, so the purpose of taxation is to create people looking for paid work, which we call unemployed. The state can then buy those goods and services. It can then hire the unemployed that were created by its tax. The people then get paid, and then taxes can be paid. Okay, and if people on average want to earn more than enough to pay taxes, goods and services will be offered in sale in sufficient quantity to obtain those extra dollars. State spending in excess of taxes, which is called deficit spending, provides those extra dollars to be saved by the private sector. The public debt equals the dollars spent by the state that have not yet been used to pay taxes. And they remain outstanding as outstanding tax credits until they're used to pay taxes. They rest in as what we call reserves, securities accounts, and actual cash. And those are the net financial assets of the system. Okay, and when just as an aside, when interest on the public debt is paid, the Fed simply credits securities accounts. When we ask how the public debt is repaid, we respond, the Fed debits securities accounts and credits the appropriate reserve accounts. There are no taxpayers or grandchildren in sight when that happens. And what is the relevance of MMT? Why are we here? MMT understandings put policy options on the table that were not previously considered viable. Okay. The second thing, important thing about MMT, which is I've started more than 30 years ago, is that a positive interest rate policy, an interest rate greater than zero, and we consider that the 0% policy rate is the base case for analysis for floating exchange rate system. Okay, a positive interest rate results in payment of interest that can be understood as basic income for those who already have money. It's simply the government spending euro or dollars into the economy by awarding interest to holders of treasury securities. These are people who already have money. Let's see. We also recognize, importantly, that since the government is a net payer of interest, higher rates can impart an expansionary, inflationary, and regressive bias through two types of channels. One are the interest income channels, and the second is the forward pricing channels. This means that Fed tightening by increasing rates may in fact increase total spending and foster price increases, contrary to the advertised intended effects of reducing demand and bringing down inflation. Likewise, lowering rates removes interest income from the economy, which works to reduce demand and brings down inflation, again, contrary to advertised intended effects. And We understand that with a permanent zero rate policy, asset prices reflect risk-adjusted valuations and do not continuously accelerate as presumed by the term asset price inflation. And if you look at Japan for 30 years, for example, we can see that has been in progress, okay? The MMT understanding of interest rates is at times in direct conflict with the understanding of central banks and the large majority of academics. We see Main Street views at best as applicable to fixed exchange rate regimes, but in any case, not applicable to today's floating exchange rate regimes. Okay. Inflation, importantly, only MMT recognizes the source of the price level. The currency itself is a public monopoly. Monopolists are necessarily price setters rather than price takers. Therefore, the price level is necessarily a function of prices paid by government and its agents when it spends, or collateral demanded when it lends. And if you look at the job guarantee, which is discussed, I'll probably go into that during discussion, but it is part of the base case of analysis. And I think I've used up my 10 minutes. Is that correct?
Yep. All
so
right.
I will stop here as advertised.
All right. Let me go through some points. So Warren has put a lot of stuff on the table, and we may want to go on steps. I will not discuss the issue of who started out what's called modern monetary theory or not. I leave it to the people working within modern monetary theory. Certainly some of the concepts that modern monetary theory uses are very old and have been associated to the names of Smith, Knapp, and other, but it's not relevant. I think that what's relevant is the assumptions of modern monetary theory that Warren has presented as matter of fact, by saying that MMT describes the way in which monetary transactions work and the circuit of monetary transactions. The first and pretty crucial assumption is, and I repeat, MMT alone recognizes that the US government, let's make it general, the government, the state, the political power, and its agents are the only supplier of that which it demands for payments of taxes. Now, this statement, as a matter of historical fact, is false. Why? Because you can borrow to pay taxes. And you can borrow from banks and from money created not directly by government, but created independently from the amount of legal tender that is available. This is the main initial confusion. There are other, but there is a confusion.
Oh, let me add something here.
No, please, not 10 minutes. Let's respect rules. You will answer.
I'm trying to help you.
You will answer at the end. We'll answer at the end. You will answer at the end.
I'm trying to help your position.
Here, there is both historical and logical. There is a confusion. What's called legal tender is effectively issued only by US government and other governments in their jurisdiction. But that does not imply that either historically or today, governments do not accept other things as payment for taxes. In fact, they do accept wire transfer, checks, and other things that you can send from your bank. And should you have zero currency, in the sense of cash and coins in your hands at a point in time and had to pay taxes, you can go to the, should you have no wealth whatsoever, you can still try to go to a bank, borrow money created by the bank and pay the government. As long as that bank is credible, as long as the reputation, that bank is part of the FDIC system in the case of the United States, or BCE system in Europe, that payment will be accepted. Now, that's a crucial mistake because it seems to bypass completely in one step a very simple historical fact. Money is a complex phenomenon. Part of it is created by government, and has always been created by government in various forms, or at least has been endorsed by government, or government have decided who issues it. But even a brief look at any historical book, you can start from Wikipedia, on legal tender will show you the variety of ways in which money have been created, and governments have intervened or not, have allowed or not, have regulated or not. And even today, even in the United States, any commercial exercise and private contract between private parties can specify, and this is true not only in the United States, true in Europe, it's true in Canada, it's true in New Zealand, that in fact, I do not accept cash or certain kind of cash as payment. Any store can say, we don't accept a bill larger than 20 or 50 bucks, and so on. So that implies also the currency is not a simple public monopoly. It is a monopoly in the way it's defined strictly in some countries today, but it was not until, for example, central banks were created. There were various banks that were allowed to issue pounds. That was by authorization on behalf of the crown, but it was not a monopoly of the crown, and those banks competed to various extent. Now, it's true that the government levies taxes payable in US dollar, but I said doesn't have to be cash or coins. And therefore, the US dollar to pay those taxes, it's not true that it can only originate from the US government and its agents. It can also originate from third parties and from the markets. The ways in which this is done relies on credibility. And this is a point that belongs to chartalism, to which Mosler and other in monetary theories take inspiration, but that MMT in the version that has just been presented forgets completely and makes a serious mistake. The point about money being created by government, by legal authority, is historically partially correct, but it relies purely on the fact that that government has reputation and standing. As we have seen, whenever the government loses its reputation and standing and credibility with its population, its money goes out of circulation. It's refused. It may formally be called legal tender because the authority, the dictator, the fallen dictator says it should be so, but it's not legal tender or anything of any value in the market. As a matter of fact, when the Soviet Union collapsed, the rubles went out of circulation and the new government had to find a way to replace that. When Saddam Hussein collapsed, the Iraqi lira went out of circulation. In the current circumstances in Venezuela and other countries, local currency are not accepted as a form of payments and are substituted by other more credible form of payments, exactly because governments have no credibility. So private money and public money, money created by governments, money created by private parties, historically have acted as forms of payment, sometimes independently from government regulations. And this is purely based on credibility. That is the fact that people trust the issuer of the money as a debt instrument, and that is trusted by other and by other and by other. So unless Warren wants to consider every financial institution as a branch of the government, the statement he has been made are not true. And in particular, there is no such a thing as the economy. There are multiple agents, hundreds of millions out there. And they do not have to sell goods and services to the US government or borrow from the US government to pay taxes, as he stated. In fact, he says it even stronger. He said he will not be able to pay its taxes or purchase US treasury goods. No, I sell nothing to the US government, never. I don't think I've sold a single good ever in my life to the US government. And I might have sold some services to some of its agencies when I was a consultant for various Federal Reserves, but I'm no longer, and that was a brief period of my life and a small portion of my income. Nevertheless, I pay taxes. Now, the fact that those taxes were paid means that there is money accepted by the US government that doesn't come directly from it, and certainly they didn't sell me goods and services. And in fact, the ramification number one, which is crucial, is a wrong description of the monetary circuit. The monetary circuit doesn't start. The monetary circuit goes on. There is no start or end. And so it's not true that in order for money to circulate, governments have to spend first. Neither historically, money was originated most likely after debt. As far as anthropology and historians teach us, that was the case. And it was introduced by state authorities or by local agreements as a way of measuring, in fact, size of debts that were otherwise expressed in physical quantities, such as such and such number of cows, such and such bushels of grain. And there is no need for money to circulate to have the government to start spending per se. We can imagine a government that has zero expenditure, zero taxation, and still regulates money creation, still decides who issues money, who does not, and has therefore a monopoly power on those creators of money. And money circulates in the private economy with the government being a computer, a terrible computer that can absolutely impose who issues money, who's not, but has zero expenditure and zero taxation. I'm done for the first part.
Okay. So look, number one, I didn't take inspiration from anyone. I'd never read Keynes. I'd never read Knapp. I had never read any of those people. Number two, banks are designated agents of government for the purpose of payment of taxes. They're members of the central bank, and tax payment debits the reserve account at the central bank. The Fed debits the reserve account of the central bank and credits the account of the Treasury. It's only dollar deposits created by member banks that can be used to pay taxes. You can't, not any of the shadow banking system or anything like that. You can't use commercial paper to pay taxes. That's why we have like counterfeiting rules. Okay, it's only the thing designated by the government. So if you've got borrow money from Citibank, the money goes into your checking account, you use it to pay your taxes. When that check clears, the government debits the reserve account of Citibank. If Citibank doesn't have adequate reserves, the government, that becomes an overdraft, and Citibank has a, and if they don't cover that overdraft, it's booked as an overdraft loan, and it's collateralized by Citibank's capital, which is determined by government regulation. Your banks are required to have a certain amount of equity capital. Okay, otherwise they're not permitted to exist, and they're not permitted to make loans, create deposits that can be used for payment of taxes. Now, if you don't think, we're not talking about all financial institutions. We're talking about the commercial banking system. They've got a regulatory framework called CAMEL, C-A-M-E-L-S. That means the government controls, C is capital, they control asset quality. All deposits come from, bank deposits come from lending. The government fully regulates the lending process. So in effect, they're regulating the creation of bank deposits by regulating the lending process. Okay, and they're also, of course, ensuring the bank deposits. Now, you mentioned that it only works if they're part of the FDIC, and I agree. That's also being part of government. That's another government agency that is involved in conjunction with the banking system. So the idea that you can borrow from banks to pay taxes does not refute the notion that the funds to pay taxes come from the government. They do. Every last penny comes from the government from inception. There's no other source of it. Otherwise, it's called counterfeit. So that's gone. Now, you said in order for money to circulate, government has to spend first. I didn't say that at all. Now, if you're going to be setting up straw men and attacking them, fine. But that's I don't think that's appropriate for this kind of discussion. I said the funds to pay taxes come from the government. I didn't say money can't. What can be defined as money can't circulate without government. Number one, you can define money any way you want. You can define it as gold coins or something, and it'll circulate without government. Okay, so it's not about that. That's not what I spent. You made an interesting statement. You said with no tax and no spending, money can still circulate. Yeah, but it wouldn't be that government's money in the sense that I'm talking about, which is the tax credit that the government requires, okay, for satisfaction of tax liabilities to avoid penalties. And so, you know, I'll leave it like that. You had a lot of other things in there, but I don't think they're worth responding to at this point.
All right. Well, first of all, just to make clear that I'm not setting up any straw man, let me here share a file from your white paper. So for our listeners, this is your statement. The U.S. government is agent from inception necessarily spend first. Only after that can taxes be paid or state securities purchased. And as I showed and proved, this is not a correct statement.
Yeah, spend or
it's spend. What you have a bad habit, which is that of interrupting. I don't take that in debates. I don't interrupt you. You don't interrupt me.
Yeah, excuse me, guys.
Let me go on then, please.
Gentlemen, this debate is over. I've had enough.
You got a problem with debates, I'm afraid, and you have nothing to say, which is why you leave. That's it. That shows the substance of modern monetary theory. The guy can't handle a debate. Kids, the show is over. Allora, non so cosa dire, adesso possiamo parlare in italiano, visto che abbiamo gli spettatori. Abbiamo provato questa sera l'inconsistenza del guru di Modern Monetary Theory. Ha la brutta abitudine, come vedete, del talk show, va nei talk show ed evidentemente pensa di poter interrompere, e quando gli spieghi che racconta bugie anche su se stesso e quello che scrive, scappa come un coniglio. Ovviamente ha passato l'intera serata. By the way, quando l'avete sentito dire che lui ha inventato questo, lui ha inventato quello, e si è addirittura piccato di non aver letto niente, da un lato la sua scarsa conoscenza dell'economia lo dimostra, non ha studiato l'economia e quindi probabilmente non ha letto niente, ma ha senz'altro scopiazzato da Knapp ed altri. Bene, signore e signori, per quanto mi riguarda, the show is over, a lot earlier than I thought. La mia signora sarà contenta, per cui non ci sarà alcun rischio di mancarci il concerto del suo cantante preferito. Pazzesco, caro Alfredo, è vero, Galloni era meglio e Condini almeno ha lottato fino al Rino. Ma dove è andato via così? Sì, perché è un vigliacco, uno che non sapeva cosa dire, siccome ha capito che sarebbe finito distrutto nell'ora che mancava, ha preferito scappare. Io spero che questa lezione serva soprattutto ai giovani ragazzi che gli vanno dietro. I giovani ragazzi che gli vanno dietro hanno visto il cantante, sai che Gianni, adesso te lo dico che è il cantante preferito di Susanna, ma probabilmente è in linea che guarda e si diverte, quindi lo può dire lei. Fabio Concato, che andiamo ad ascoltare questa sera al corso di Mestre. Beh, insomma, una cosa ridicola. Speravo resistesse un po', perché di bugie che ne ha dette di più, ed è stato molto divertente mostrargli le bugie che racconta. No, questo non insegna, non ha mai insegnato, è uno che ha fatto. Vabbè, ragazzi, questi sono i guru. Questi sono i guru e io vi spiego che i guru è meglio che con Boldrin o con chiunque sa di cosa parla non vengono a discutere, perché purtroppo, come vedete, gli saltano i nervi rapidamente e niente. Che vi posso dire? A me dispiace per i 4 ragazzi che hanno organizzato l'incontro, mi sembrava in buona fede e sarebbe stato bello se avessero potuto così, almeno ascoltare il dibattito e capire che quello che il Signore dice è una sequenza di arroganti balle. Bene, vedremo se qualche altro leading exponent di monetary theory, che d'ora in poi è Mosler Monetary Theory, per quanto mi riguarda, avrà il coraggio di venire a discutere. Vi abbraccio, siccome la vita è lunga e complicata, mi dispiace che lo show sia finito. ma io la volevo vederlo davvero. E cosa vuoi che ci faccia? Se n'è andato, è un poveretto. Ma guardate che è tipico dei guru. I guru sono capaci solo di parlare per sentenze senza contraddittorio. Appena li metti davanti a un contraddittorio, scappano. Perché le sentenze che dicono sono incoerenti, sono basate su frasi false, su affermazioni false, empiricamente falsificabili, sono una sequenza. Se lo ascoltate, la sua prima prolusione è una follia. Sembra uno partito di cervello che emette sentenze con questo tono, come se fosse Zarathustra sulla montagna. E quindi uno del genere, se comincia a dirgli buono, hai detto le tue cose, adesso tocca a me, gli saltano i nervi. Non è abituato, capite? Sono tutti così, guru. Che siano anti-vaccino, che siano modern monetary theory, che siano Bagnai. Provate a fare un dibattito con Bagnai, è la stessa cosa. Vi posso dire, Francesco Cancellato ci ha provato svariate volte a organizzare un dibattito fra Bagnai e me, faccia a faccia, come questo. Sempre fuggito. Perché? Perché sa che la sua falsità verrebbe provata. Vale per tutti. Vengo da un posto dove dovevo dibattere con Tremonti, chi l'ha organizzato, io gli avevo detto guardate che non si presenterà, infatti non ha accettato l'invito, hanno dovuto metterci qualcun altro. Quindi è così, i guru sono così. Sì, Gianluca, nel loro framework che il governo controlla anche se sorge il sole. Questo poveretto non riesce neanche a capire che il fatto che il governo stabilisca delle regole per la generazione della moneta non implica che controlla l'emissione della moneta, nella stessa maniera che il governo stabilisce anche le regole per l'emissione, per la produzione di carta igienica o di energia elettrica, ma non controlla l'emissione di tutta la carta igienica e tutta l'energia elettrica. E tra l'altro la cosa che hai notato, cioè uno si è imbarbicato FDIC perché gli è venuto in mente all'improvviso che ci sono ancora delle banche che non sono FDIC e che, ne so, Goldman Sachs o altri erano extra FDIC fino a pochi anni fa e si è reso conto che si andava a incastrare. Vabbè, sono confusi e un po' arroganti. Ragazzi, davvero, è stato divertente, è stato piacevole in un certo senso, è stato, spero, istruttivo per chi crede in questi buffoni e adesso che abbiamo mostrato la sostanza, io vi bacio, vi abbraccio e vado a fare delle altre cose. Ciao ciao, ciao ciao. Davide, se ho già parlato di scuola austriaca, ecco, mandami qualche austriaco, va, che così ci divertiamo con quelli. Ciao ciao ragazzi, saluti, dov'è che si spegne sto affare qua?